Show on Stock Market TV. You know the drill by now. Spencer, Steve, JC, we got a lot going on this morning. Let's see. We'll talk some video games, perhaps. Maybe we'll talk about some crypto. Maybe if he's nice, maybe JC will share just a snippet of charts from his conference call last night. Todd Sohn is today's guest. He'll be on at 9. We'll have Patrick Donawilla on at 9:30. So if you're watching on YouTube, do me a quick favor. It'll take less than a second of your life, and just hit that thumbs up for me button, please. And thank you. I could just do this all day, but you don't want to hear from me. You want to hear from JC and Steve. So here we go.
All right, ladies and gentlemen. How is everybody's hangover after the monthly chart strategy session yesterday?
You know, it seemed like you were going forever, but I think I was just multitasking.
I got a text from you, or a Slack from you right after, telling me what a good conference call it was. I don't get those compliments from Strazza. What motivated such a compliment?
It was a good one.
Such an immediate compliment, I might add.
Well, I watched the full thing for the most part, and I thought it was very thorough. I just thought it was a solid, quality call. You know, excellent.
How about that, Spencer?
That was excellent. Actually.
I thought it was a bold strategy, Cotton, when he told everyone about halfway through that they can leave.
I loved that.
I do wonder how many people were left when you made it clear that they could leave.
Well, he was only half joking. That was for emphasis. Like, the dollar is important, right?
Right. Yes. So anyway,
I got some good feedback on the being half pregnant. How you can't be half pregnant. You know what I mean? Like you can't have. I thought that was a good point, because people are like, "Oh, it's a bear market in small caps, but a bull market in large caps." It's like, no, asshole. It's either a bull market or a bear market. You can't be half pregnant. It's either one or the other. Like, specific sectors do not enter bear markets. It's either a bear market and there are underperformers and there are outperformers in that bear market, or it's a bull market and they're right. You can't have bull markets here, bear markets there. That's not how it works.
It's by asset class, right?
No, a bull market is referring to stocks.
Right. So I'm saying it's by asset class. If it's a bull market for that asset class, you can't slice it into.
You have a bull market and you have bear markets. It's bull markets and bear markets have to do with stocks.
But you do hear things. You hear things like it's a bear market for small cap stocks.
Yeah, like, oh, it's a bear market. It's a bear market in Apple because it's down 20%. No, they might teach you that in journalism school, but that's not how it works, right? They must teach some really dumb shit in journalism school.
Okay.
Did anybody take the time to read this lovely article that I shared?
Sensationalism 101, you know, right?
No, I learned a lot of the relevant skills. Some relevant, but also many relevant.
For the record, they teach you a bunch of stupid shit in business school too. So don't like misconstrue my enthusiasm here.
What Strazza? What article are you referring to?
Well, we're speaking of journalism. I couldn't help but have quite the smirk on my face while I was reading this gem from the Journal in bed this morning.
You read the Wall Street Journal in bed? That's what you do.
He opens the paper. You know, he does that, straighten it out, right? So it's all flat.
I didn't know that you read the Wall Street Journal in bed. You're
on JC's account, mind you, which is totally customized for me, because I know you don't use it. So anyway, let's just start at the end here for this one. No, you'll go read this. Still, it's good news for buyers that the hype has evaporated. Investors who care about profits more than purpose can finally consider clean energy stocks again. They won't quit, guys. So the title of this article was "Green Investors Were Crushed. Now it's time to make money." And then it goes into all the different issues that particularly the solar companies are having.
You know, there's going to be some dumbass in California who's going to read that and take it seriously.
It's just it seems like while the environment has changed, they're not giving up just yet. Still a big push for these things. A couple really good points were made. I really, really like this sentence right here. So the first lesson is debt. I'm just going to read this whole little piece. The clean energy sector is dependent on vast amounts of borrowing, so high interest rates really hurt. Roman Boner, who runs a clean energy fund at Dutch fund manager Rebecca, points out that major projects are typically financed with 80% debt. So rises in financing costs have a big impact. Investors who bought into green stocks probably didn't think they were making a leveraged bet on treasuries, but that is what they ended up with. And if you look at some of these charts, just look at TAN, look at the solar ETF. It looks like bonds, right?
No, worse.
High interest rates destroyed
No.
these companies, and it's bigger than that. It's on the consumer side too, right? Where if you're going to put solar panels on your house or do a lot of these clean energy projects, you're typically borrowing and financing them, right? So that hurts. And then the interest rates hurt in a third way, which is valuations, right? These are future cash flow companies, not today's cash flow companies. And in a high interest rate environment, those cash flows are just worth a whole lot less. So from the bond market.
Yeah, I think the solar industry is maybe like many other industries. You probably need to slice it by market cap a little bit and look at it that way, because the higher valuation companies, Solar Edges of the world, it's tough for them. The smaller ones, maybe that aren't as reliant on debt, maybe are in a better position, but I don't know.
Who are the two worst performers in the S&P 500 this year, Spencer?
Solar Edge. Oh no, well they're in it. They're not in it for long.
Still in it,
yeah, still in it. Who's the other one? Enphase. Yeah.
You didn't even have to look. Didn't even have to look.
Two of the solar stocks. It was that simple.
All right. Are those? But those are the two largest. It's kind of my point, though, right?
I mean, only two solar stocks in the S&P 500, though.
First Solar's not in it.
Oh, they might be.
Maybe.
Yeah, First Solar's got to be in it. It's the largest component of the solar. Solar Edge and Phase, right? Also down at the worst stocks in the S&P 500 this year. Moderna down 55%. Dollar General down 45%. Albemarle, the lithium special, down 44%. Walgreens,
they touched on lithium in the article too.
Pfizer.
And they made another point. Of all these clean energy names, one has stood out as, the resilient powerhouse. Again, Tesla's just so good.
Look, I think you have to slice and dice it, whether it's market cap, whether it's by industry, because you really can't paint clean energy with one brush. There's different economics for solar versus
the brush.
wind.
You should paint it as like a kind of like a shit brown.
You
paint it with that color.
What do you mean? You can paint all these stocks with one brush except for Tesla. They're all terrible, and Tesla's really not a clean energy stock.
Can we hit the state of the market? This conversation
for the performance, but I'm saying if you dig deeper into the economics, they're different. All right, state of the markets,
please. I want to talk about sector rotation, Mr. Strazza. When I say sector rotation, what does that mean to you?
The same thing's on my mind today. So please.
Hey, now.
Hey, great.
Look at you. Oh, you're finally listening to me, Strazza. It only took you this long.
So where's your head at? Is it finally happening?
That sectors are rotating?
I thought you were going to go into some sort of a value over growth.
Oh, I actually wasn't going to go there, but do you want to go there?
Well, I think value. This is value growth. Like you make the point, you made the point last night, as you always so eloquently do. If the biggest, heaviest weighting mega cap tech stocks are leading the way that they have this year, this is how these charts are going to look every time. It's more about what's in the denominator of these ratios than the numerator.
This goes unnoticed, right? Obviously, we pay a lot of attention to it around here, so we kind of take it for granted, and I get that. But sector rotation is the lifeblood of a bull market, and something I study in investors. I have for a very long time, and one thing that I found is that investors in general just don't like to do the work, right? As humans in general, we're always looking for shortcuts. That's actually perfectly natural. That's not that it's not. It would be inhumane if we weren't doing that, right? At the end of last year, remember, coming into January, I remember people getting really upset at me because I was talking about how we were already in a bull market coming into 2023, because everything was up in the back half of last year. People talk about how terrible of a year 2023 was. 2022. Yeah, maybe the first half of the year wasn't very good, but the back half was fantastic. Everything was going up in the back half of the year except mega cap growth. And then a funny thing happened at the beginning of the year, Strazza. We got sector rotation. In fact, that sector rotation took place in the first week of the year. So what ends up happening is that the year-to-date numbers are very skewed and very obnoxious, much more obnoxious than usual, simply because that's when the sector rotation took place. So we anchor a lot to year-to-date returns this year, because that's when the sector rotation took place.
Yep.
But generally speaking, year-to-date returns don't really matter much to us. But if you're one of these journalists who specializes in sensationalism and malicious intent to hurt your audience for selfish reasons, so you could whore yourself out to your sponsors, right? Because that's how the way this works, then you're going to use these obnoxious, skewed numbers to your benefit at the detriment of your audience, right? You can notice it. You see it every single day. And then in the spring, remember, we were buying Caterpillar. We were buying small caps.
Yeah.
And if you just looked at the chart of Caterpillar, or just looked at the chart of industrials, or just looked at the chart of small caps, you would say, this JC guy's losing his mind. What's the matter with him? Because people aren't thinking fourth dimensionally, to quote the great Dr. Emmett Brown. If we reverse engineered the bull market, then mathematically we needed to see that sector rotation. And we did. That was the bet that we were making. And we made a lot of money on those trades, if you recall. If you were just looking at those individual charts in a vacuum without considering the context, you wouldn't have put on that trade. So here we are in December of 2023, 17, 18 months into this bull market. People are still telling me it's a bear market. And we are now getting multi-month highs in small caps relative to large caps. New multi-month highs in the equally weighted S&P relative to the cap-weighted S&P. And the same idiots that were complaining that the indexes weren't able to move higher in the back half of last year because they didn't bother to actually count all of the stocks that were ripping the entire back half of last year are the same assholes that have been telling you all year that it's only 7 stocks that are going up. And now those same fools are complaining that the large caps aren't able to keep up with the small caps. I hope you guys are paying attention. I hope you guys are paying attention. This is not a bug. It's a feature. This is how it works. And this is a great representation of that. What do you think, Strazza?
It also will, this kind of rotation, these lines starting to move up and to the right instead of down and to the right, happens in an environment where I would hope you also hear some level-headed people come out and say, ooh, look at this broadening of participation. This is healthy bull market stuff, right? Because these ratios moving up and to the right means more stocks are doing better.
And you bring up a good point about rational investors. It doesn't make sense, JC. This doesn't make sense. Why are investors acting crazy? When there's money involved, humans do not act rationally.
Yeah, they buy.
You don't have to pretend that they do.
Right.
Yes, I know it's irrational. Yes, it always has been. It always will be. Not because of the decimalization of the stock market, not because of the 0 days till expiration options. It's because humans don't change.
Because of the Fed.
Because of the Fed. Right. It's all, it's all Trump's fault. It's all the Biden guy, the Powell, the Yellen, what's the guy in Russia? The Putin,
Putin.
the Putin. It's all the Putin's fault.
I do.
It's funny. Listen, if you're not enjoying the show, not our show, like just the market, like the circus that is the stock market. If you're not enjoying it, like you're just not paying attention.
Listen, you're 100% right. I have CNBC and Bloomberg on in the background here every day, and I've heard it a couple times over the past week or two that the mega caps aren't performing, they're not working. Microsoft and Apple are dragging on the NASDAQ. I have a fun fact for you. Yesterday, the NASDAQ 100 was down what? How much were we down yesterday? Wasn't a good day.
Like 90 bips or something?
Yeah, it was like 1.5.
Majority of components were up on the day. They were dragged down by those magnificent 7 stocks that dragged those indexes up for so long.
Isn't that hilarious? Isn't that so funny?
I was listening to our good old friend David Lundgren yesterday on Twitter Spaces because he's just a person who I will listen to any chance that I get. That's why we're so lucky that we have him on here sometimes. He made such a good point that I forget the exact words that he used, but he said the large cap averages basically give you a head fake or mask what's actually going on beneath the surface in a terrible way at the worst times, right? So at peaks and bottoms, if you look at the indexes themselves, and I think a great example was all of 2021, we were in a bear market beneath the surface.
Right.
The major averages.
Market peaked in February of 21.
You could have come into 2022 not paying attention and be like, S&P new all-time highs. Look at this. Market's great. It was terrible beneath the surface, right?
Terrible. Yep.
These large cap indexes aren't giving you good information. And he pointed that out in such a nice way. I just thought it was great because a lot of times
it's not that it's not giving you good information. It is giving you good information. It's just not giving you all of the information.
Right. Yeah.
Like you can't say it's giving you bad information. It's giving you good information. It's just not all of it.
You have to understand the math, right? And take the time to know how these indexes are.
Oh, young Strazza. Grown adults don't like math.
Anyway. Let's move.
All right. You ready? You ready for the hotness? Are you ready? I don't know if you can handle this heat, Strazza. I don't know if you can handle this heat.
What?
Spencer Israel, why don't you throw up slide 3?
Alfonso, throw up slide 3. Thanks.
And here we're looking at the sector performance since we got the rotation into small caps and out of large caps, which, by the way, started almost a month ago. And look at the leaders and look at the laggards. Best performer, real estate, financials, materials, industrials. Worst performers, communications, energy, technology, right? Look at the next slide. This is on a cap-weighted basis. Here's an equally weighted basis. Real estate, very interesting performance out of consumer discretionaries on an equally weighted basis. Financials, materials, healthcare. Worst performers, energy, staples, utes, communications, and technology down near the bottom, by the way, which is interesting. Industrials down there as well, in the bottom half. Very different than what we've been accustomed to seeing. Am I wrong?
Hey, great job with this.
You like that?
Yeah.
You like the anchoring point to the change in the situation?
You always have a good reason for why you picked your dates. So this is when those ratio charts we were just looking at bottomed. Don't sleep on real estate, right? These are financial companies. They're not trading.
It used to be.
Yeah, right. They're not trading like the other defensive groups. They've very much been impacted by the bond market in an outsized way. And I think they're going to move with financials. Spencer makes this point a lot. They have a lot of the same problems.
So the Russell 2000 started outperforming the S&P. That bottom was on November the 10th. The equally weighted S&P started outperforming the cap-weighted S&P. The following Monday on the 13th was that bottom. So what's the proper anchor date? November the 10th or November the 13th or November the 14th when the new highs list peaked?
I feel like we've gone beyond splitting hairs here.
I would use the 10th. Guys,
this is a valid question. This is, I mean, nerd alert, to be fair, but it's a valid question. Listen, this is a way better question than some of the other dumb shit you see out there.
Hey, I got a hot one. It's time to buy the banks.
It's been time. We've been buying them. What are you talking about? European financials are making new 52-week highs, bro. Now you're telling me it's time to buy the banks? We've been buying them.
It's time to buy U.S. banks.
Well, JC, it's not the time, right? It might not be the time to buy.
It might not be the best time, but still the time. Fair enough. Spencer's right. I'll give you that one. I'll give you that one.
These have been looked at as the same way as like any distressed asset all year. These bank stocks.
Dude, you tell people you're buying bank stocks, they think you're crazy.
Your head starts spinning.
Your head starts spinning, which is, that's information. Spinning heads exploding. That's information. That's good data.
What do you think about this Customers Bank Corp? You see the chart?
Yeah.
What do you think about that?
What do you mean? What do I think about that? Looks great. We talked about it last night. We're in.
We have seen this before. This is this is environmental data.
You're such a veteran, Strazza. You hear him, Spencer?
I've
seen this before. Such a veteran,
Steve,
you don't have enough gray hairs to talk the way you do. You don't have enough gray hairs to act in general the way you do.
I like your tweet yesterday about the First Republic and the signature assets. I hadn't thought about that.
They took them all. Yeah,
I know. I hadn't thought about that in, I don't know, 4 or 5 months more, maybe.
They took a lot of deposits.
Yeah.
March, April, May, when these guys were disappearing. And I don't know, right, if it's going to be different this time. Nobody really knows. What I do know is that they have a playbook now for what not to do, right? They can look at what Signature and Silvergate did and say, oh, let's not make those mistakes. Let's be buddies with the regulators. Let's not try to, So I don't know. We'll see. But the stock tripled since May.
I want to do a quick rundown here, and then I got an interesting chart. Dow futures down 100 points this morning. S&P futures down 13 handles at 30 basis points. Nasdaq futures down 40 bips, about 60 points. 30-year Treasury bond futures up a whole % this morning. Gold up 30 bips, silver flat, copper down 1%, oil flat, and the dollar slipping lower with volatility flat and yields also falling down to 4.2% for those yields. And the Bank of Bitcoin sitting right around 42,000, holding yesterday's gains very impressively, and Ethereum as well, sitting right here around 2,200, Solana at 60, all holding on to the monster gains over the last few days. Very impressive consolidation from some of these cryptocurrencies, I must say.
I think rates coming off the way that they have, you can't underestimate the impact that's had from an intermarket perspective on risk assets.
I thought higher for longer there, Mr. Strazza.
I'm allowed to change my mind, right?
Well, I wasn't picking on you. I'm just
listen. I was one of those people earlier this year saying, certainly looks like rates are going higher. That's what the charts were suggesting then.
Dude, we're hitting the lowest levels since early September. We're in pre-Labor Day levels here for the 10-year yield.
JC and I are getting along really, really nicely this morning, Rachel. I was going to stay away from the gold. I was hoping to stay away from the gold stuff.
I don't understand what your problem is with gold. What is your beef with gold?
No beef.
Speaking of beef, you saw they delisted live cattle futures? What's that all about?
Wait, what?
Todd Sohn chomping at the bit.
No, I did not see that, JC.
Dude, how are they delisting the live cattle futures? What?
Because no one trades them.
That's such a bad move.
Just get the fuck out of here.
Listen. It was a good futures contract. Now they need another one.
Wait, it's funny you mentioned that today of all days, though. CME had a press release drop. Was it last night or this morning? Overall volume on CME in November up 21% year over year. Record record average daily volume of 16.8 million contracts. Strongest month ever for the U.S. Treasury complex. Average daily volume of 10.6 million contracts. Record November average daily volume in agricultural products as well. And I guess not live cattle futures. I don't know.
Listen, I like these investments, CME, SIBO, Interactive Brokers, long term. It's just a bet on continued evolution of financial markets, right? The better and better we get at this, the more and more advanced humans get at this stuff, the more likely they are to go to CME or go to SIBO and start messing around in derivatives markets, right? And doing more advanced things. That's all that is. These stocks long term, I think, offer a really, really attractive vehicle for just betting on things that are going to keep happening.
That CBOE, you want to talk about relative strength, tipping its hand. I mean, that thing was making new all-time highs before anything else. Still is. Can we talk? I can't even take you guys seriously. We have Todd Sohn just hanging out in the green room.
All right, I'll bring Todd in.
Hold on.
What is this basic cable where we just leave the best guests sitting in the green room? I mean, come on.
Last night, Jim Cramer said it's going to be a new bull market for protein because of these GLP-1 drugs.
Speaking of being an old man, who watches that?
To eat more protein. So, yeah.
Were you really sitting there watching Jim Cramer last night?
He made a list of stocks. It was hilarious. I had to turn you off for a second and go listen because I was dying. He made a list of stocks that will benefit from the weight loss drugs.
Wait, real protein?
One of them. People are going to need to buy new genes. I knew that was coming.
Real protein or lab grown, like Beyond Meat protein?
No, dude, real protein.
Okay.
Can we stop with this? I can't take any of you seriously. Can we go? Bring them on, please. This is ridiculous. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd Sohn in the house.
What's up?
Can you believe they delisted those live cattle futures? What's that all about?
I was unaware of that. That's I don't know. I don't know what to make of it. There's a lot of jokes that we can do.
So your institutional clients at Strategist are not asking about live futures?
No, I don't know how much they traffic in the cattle movement.
Yeah.
Todd Sohn, exactly how many gold bars do you own?
Right now?
Yeah.
0.
Oh, no gold bars for Todd. Okay.
You know that gold just closed at all-time highs, right?
I'm fully aware of it. I think
is that do you normally see those in downtrends, Todd?
No. What do I think about gold? I think it's a really interesting chart, right? The risk reward is there for being long. I am a little weary that all of us, technicians, chartists and whatnot, are going to be all over it, and I wonder if there's going to be set up for a little disappointment.
Twitter was on fire yesterday morning with the incomplete candles. Incomplete candles everywhere yesterday morning.
Should we be concerned about that? I don't know.
Yeah, listen. And also, just to be fair, JC, not the kind of price action you want to see accompany an upside resolution. Worst day since March, nasty bear engulfer right at the upper bounds of that range. That was some ugly. I know it's just one day, and we need follow through here today, but it was not a pretty candle.
My suggestion yesterday morning, Todd Sohn, you can opine on my thoughts here. Let them dance. Just let them dance. You know, it was Monday morning. Everyone's freaking out about Sunday night futures, like it's like 2008 all over again or something. Let them dance.
It doesn't do it for me. I mean, I can get some cash. I can get equities. I'm not feeling it this time around.
That's what a technician says when he doesn't like it. It's an interesting chart.
It's interesting.
See, I might be hating here and getting emotional. I just think, okay, I have better opportunity to be in cash, the S&P, the Qs. If gold goes on the rips, that's my fault. But I am just a little mindful that it'll be a very watched breakout going forward from here.
Before we get into Todd's charts, can we throw up slide 15 here? Todd, we were just talking about the sector rotation that we've been seeing since arguably November the 10th, November the 13th, November the 14th, depending on how you want to anchor that. Right around that second week of November, you really started to see that rotation. And here we are, you know, in this range of those former highs for two of the important indexes. Of course, Dow's right there also. The U.S. industrial sector XLI is right there also.
Yeah.
You know, there's a lot of this overhead supply here, here on December the 5th of 2023. What does this mean to you?
I think, some of these big cap names have had phenomenal years. They've gone sideways for the last few months. I'm okay with that. I'm very mindful that if you put the Magnificent Seven, put in quotations here, as an index, they declined 50% last year. That sure sounds like a significant structural decline. And I would not want to be selling stocks. I think I'm much more inclined to be a buyer in 2024. And
well, which ones? You're going to buy the Qs below the 21 highs? You're going to buy the S&Ps below the 21 highs? Or do you think that there's more opportunity at the individual stock sector and even industry group level?
I think it might be a bit of both, and if you're saying, all right, well, the Qs are up, despite what I just said about the decline, they've clearly had a really good year. The stuff that hasn't worked, small caps, portions of financials, portions of healthcare, I'm sure we can find some industrials in there. That's really interesting to me too. That they're and
not
those
interesting.
Are
not interesting like gold is interesting.
No. I'm much more attracted to that. Small caps have gone 520 days without a new all-time high. That's only the 7th time that's happened, so the bar is really low. They're in the bottom decile of performance relative to large caps over the last 40 years. Typically, they outperform coming out of a recession, but I think this is just one of those cases where the rubber band's going to snap back, and I think that's probably the case in 2024.
But what about when they move the goalposts and say it wasn't a recession?
Then why did they go down 35%?
Thank you. Somebody's paying attention.
Yeah, so I think there's a lot of really interesting. I keep saying interesting here. Now you got me on the gold thing. A lot of timely areas outside of mega cap growth.
Yes.
And some of them will work fantastically. I think you're starting to see it from the banks. I don't love owning banks. I think they're a great rental trade because we always get burned by them. But then I have other areas like biotech. Can biotech get its act together? Maybe
can we talk about this healthcare? Because I know you brought some healthcare charts.
Yeah. So healthcare has had a substantial amount of outflows at the sector ETF level. It's been woefully inconsistent, like just the most frustrating sector out there. And it's a big weight within the S&P. It's 13-ish%. But so I find it, if you're looking for a contrarian play into 2024, a lot of investors who use the ETFs have left the space. And so that sets up this interesting low bar, right? Everyone's focused on gold, crypto, mega cap Qs. If you need something a little bit different of a tilt in your portfolio, then healthcare is kind of one that I like, and I like it way better than staples and utilities and REITs for the most part.
Okay.
Can you speak to the dispersion among industry groups within healthcare?
Oh, yeah, I was just going to say what within healthcare then.
So biotech is really the one I'm watching because that has been rate sensitive, right? Yeah. You hiked 500 or so basis points, and you really saw the impact of that down the biotech cap scale, right? Those are the companies that need the funding and get really impacted by that stuff. The chart is, I want to say the XBI is near the lows from last year, so that's setting up interestingly, right? If you want
every time the XBI has ever been down here, it's been a great buying opportunity.
Yeah, so that's interesting to me. Farm is more messy. I don't really love what's going on in there. And then the kind of curious trade to me is shorting anything GLP-1 and going long equipment. So
that's
IHI,
what we're doing.
XHE.
Right? GLP-1, that's a fancy word for Eli Lilly.
That's a fancy word for Eli Lilly, Novo Nordisk losing weight.
We're in.
The weight loss drug. Lilly and Novo, great trends, but super extended. And then on the opposite side of that is your Abbotts and your Medtronics and anything else in XHE and IHI. I don't love playing mean reversion, but in a tactical sense, I think it makes sense. And a lot of our clients have been kind of perking up to that idea too. Like, okay, this actually, they like the equipment companies.
Yeah.
They're good businesses from what I understand.
And if you really want to put juice on that bearish GLP-1s trade, you buy the diabetes companies that were absolutely like murdered. Look at something like DaVita, just off the lows from last month. These stocks are really coming back to life.
Yeah. This is I always like when what we do is looking at markets kind of intersects with real life, because I think the anecdotal observations of this weight loss stuff is really ingrained now in the mainstream world.
What do you got? What do you mean?
You can find a person on the corner talking about it. It's just in every conversation. You have companies like what was it, Walmart or Pepsi, and I think I saw on the TV this morning Smuckers
mentioning the company,
mentioning that these drugs are really affecting their business. I don't know if I buy that. Maybe. Or maybe it's just
so
that they
much
offer
time to
junk
watch
food.
so much television. I don't know.
It's just on in our office. You know, there's a TV, well, not in this room, but there's a TV literally above me, so I just naturally hear and see things.
Well, you said Kramer's your guilty pleasure. Mine too. Did you watch last night? He had a whole list of plays. Like, doctors are telling people to eat more protein, so Tyson's going to benefit. Hormel, like, we've just, this whole thing is crazy.
It's all over the place. I mean, I'm sure we'll have reached peak when I hear Walt Disney or Comcast saying how the weight loss is allowing more riders onto their roller coasters, right? Because, you know, sometimes if you have a weight problem, you can't sit in the seat, unfortunately. It's just how they build them.
One of the sell side banks came out with a note about how much money the airlines will save in fuel because there will be less weight on the planes. Like, I'm not kidding. This was a sell side report.
Maybe that's right.
Getting frothy, Toddy.
Exactly. There's froth there. There have been great stocks, especially in the healthcare space. It's really the only things that have worked outside of, like, you know, UNA, the managed care names have perked up. And so I just think there's a really interesting contrarian play there in terms of the flows, in terms of the names that have been really beaten down.
Hold on, Todd, how do you stay in such good shape? You doing Pilates or something? What are you doing?
I get up at 5 a.m. I hit the gym, go on the treadmill.
Dude, good for you.
Wow.
Good for
my
you.
Sanity check every day. Especially with 2 kids.
You put the TV on? Is that what you're doing? You putting the TV on?
Podcast.
All right.
Are you coming to hang out in January? Because you're on a very special short list of friends that
I would be happy to. And I'm going to hang out tomorrow.
Are you coming Wednesday?
I'm going to come tomorrow. I'm going to make a cameo. I already secured financing secured from the wife. You know, time secured.
Nice.
Tomorrow is when you guys all hang out in New York City without me.
Yeah, we'll be talking shit about Strazza the whole time.
Yeah. I'm going to send you a picture.
Yeah, send me pictures. Yeah.
Okay. All right. So healthcare, largest weighting in the Dow Jones Industrial Average, 21% of the index. Second largest weighting in the S&P 500. Yeah. So kind of a big deal. No?
It's an important group. It's way more important than energy and materials, and there's the opportunities here and there. But you kind of want healthcare involved.
Yeah. I personally don't give a shit. But if you are long the indexes, I suppose that you do, right?
Yeah, exactly. Like, you know, if you're passive or you're just rooting for stocks.
Is passive really a thing, or are you just letting the Wall Street Journal journalists decide which stocks you own, or Standard & Poor's? Are you really passive, or are you just not the one making the decisions?
It's one of the greatest tricks I think that have ever been played. Now, it's rewarded investors. Don't get me wrong. You can buy the index for 2-3 basis points, but Tesla didn't go into the S&P until a couple of years ago, and now you have Uber going in. And I mean, Uber's had its fair share of corrections, but so it's kind of this arbitrary mechanism of what goes in the S&P and when.
It's a great momentum strategy though, because it's buying more of the best ones. It's kicking out the worst ones. It's not a bad strategy.
And then the Dow is by no means bad. Dow is an active strategy. Let's get that straight.
They're all active.
But the Dow is a bunch of guys in a room picking the stocks. Walgreens should not be in the Dow anymore. It's got to get out of there.
Yeah, but they don't meet often enough. I don't know what they're so busy doing.
I don't understand the frequency, actually. It just kind of appears out of nowhere.
It's wild. It's wild.
Committee of journalists.
They should do like a Hard Knocks, but for like the Dow Jones people, you know, where they like follow them around as they're deciding, you know, like so you can see like just what goes through their head when they're making these stupid decisions.
I love that idea.
Really understand. That'd be dope, right? Like on HBO, really, Dow Jones Hard Knocks. Like for the true nerds? No?
I love it. I would watch that in a second.
Talk
You
more
would. You
about
and me would be the only
financials.
ones.
Hold on.
Right?
You said
Financials.
data and exchanges over banks. It's sure been that way. Does that remain the case though?
So here's the context is that the financial sector is changing. It's not just your traditional, lenders like a bank out there, insurance companies, and whatnot. You have the growing data providers, S&P, Morningstar, FactSet. I'm probably missing one in there. The exchanges, CBOE, CME, NASDAQ. Those charts for the most part have been pretty good. And there's clearly a monopoly, not necessarily a monopoly, but they have pricing power, right? If your data gets raised, and Morningstar, S&P, they do it every single year. Oh, the price of your quotes are going to go up $1. People are paying that, right? And the exchanges too. You can raise listing fees. People are going to pay that. So the financial sector is going from traditional stuff to this more technologically advanced. And now you have Visa and MasterCard are in there too. Yeah. I'm sure down the line, maybe even PayPal and Square could end up in there.
Yeah.
For the S&P, that is, they're in the Russell financials, I think. And so I think that's where the better structural opportunities are. The banks are finally getting their act together, though, I think, as the rates have come off the boil here. So that's more participation. I don't love owning them for a long time, but there's a great rental trade that's going on right now. And the bars, people hate the banks. Let's be honest about that.
How I mean, I agree. People, how are you quantifying that hatred?
So I can look at flows. Financial sector flows haven't been great. You can look at analyst ratings.
You think has it been as bad as healthcare?
No, healthcare is the one that really sticks out. Earlier in the year, and throughout the summer, you had a lot of money out of financials. Not as extreme as healthcare, though. But it's still evident to me that companies are leaving. And also, what's really notable is that when you look at model flows, model portfolios are growing within our industry, right? And that's where a BlackRock or a State Street will say, okay, I'm going to wrap all these portfolios together. I'm going to move money around in different sectors and different asset classes. And so what I like to watch is when these model moves come in and out. So I can see when a company says, I'm reducing financial exposure. And a fair amount of that has gone on this year, throughout the year. So that to me says they're underweight financials. Does that make sense?
Yeah, that's interesting. I like that.
Yeah.
Everybody hates the stocks, I think, is the moral of the story.
Yeah, and they've kind of been right for the banks at least because they've been so terrible. But also keep in mind that international financials have actually been great. That's been a good tell this year. That there's no credit crisis, there's no economic crisis. Santander broke out, I think, this morning, right?
Even the banks.
Danske Bank over in Denmark.
Yep.
That's the opposite of what has usually preceded issues here in the markets. And even the Japanese banks have been on fire for most of this year.
UBS too. You can find some in Europe that have been good. HSBC has been good.
So if you're worried about some sort of credit crunch and brewing, why are those stocks going up? Simplify it.
Yeah. Like we say around here, why is Deutsche Bank not at zero? If there were problems.
This is manipulation.
But so I do like the idea that the financials have kind of morphed, and probably for the better, into this almost technological type of sector.
And you make
can we talk about sell side pessimism? Right, they came into the year consensus that the S&P 500 was going to actually go down this year, first time this millennium. It was actually the opposite. The index performance was some of the best we've ever seen in history. The Qs are up 50% off the lows. 50%, Todd. I got people telling me that it's a bear market. 50%. S&P 500 putting up a 30 spot off the lows. I don't know what kind of serial killer thinks that's a bear market, but why don't we talk about how the sell side has yet to come around?
I think the problem is we're all looking at the same stuff. We all learn from the same textbooks, and there's a few select strategists who have diverged from that pack and got a little bit more adaptive, and they've called it right. But everyone's still looking at the same thing, expecting a recession. The market says entirely different stuff right now. My way of viewing that is the $1 trillion that have gone to money market funds this year. It's like 5% yields were the holy grail. And I
couldn't
could
have been a worse
like,
decision. Couldn't have.
No. Cash was sounded great. Cash sounded great. Oh, 5%. Love that. I can pay my Netflix
Todd,
bill.
if it's too good to be true, it probably is.
Yeah,
and it was.
And it's the opportunity cost. You're going to have clients out there who are going to be, why am I in cash? And then I see the NASDAQ up 50 since October, or 45 this year, whatever it is.
50%.
The cash was basically the holy grail. 5% yield. You've seen Indiana Jones is when he gets the cup in the last part of that movie, and he's got the holy grail, and he can heal everybody. So that's my way of looking at it, and that money still continues to pour in. Over the last 2 weeks, it was $100 billion.
I was going to say, we just got new data on the updated data last week.
For money markets? Yeah. So they skipped a week because of Thanksgiving, but from November 15th to the end of the month was $100 billion. Money market. $100 billion.
Todd Sohn likes the release of the money market better than Hanukkah, right? It's way better.
Every Thursday that data comes out, it's like my new friggin' like prime kind.
So the answer is it continues to increase. It is not decreasing.
Yeah. And I think some of that will be sticky because you have people who are getting older. If I'm 90 years old and I just kind of want that, fine.
Are we getting a change in the rate of change? Like, is the rate of change slowing or still going?
No. These last 2 weeks were big. It's still going. The rate of change hasn't really slowed, and outnumbers equity ETF flows by a huge amount. And the money's not really coming out. It's retail and institutional.
How are you dividing those? How are you splitting those up?
So the data provider actually splits them up. So I think it's institutional money market fund where it's going to have a higher fee or a higher minimum, right? You got to put 5 million in at least, and then retail you can just like a Vanguard product.
Got it.
It's not coming out. Some of it should. I think if next year, if you get small caps to rip, you get equal S&P to rip. I kind of imagine some of that's going to finally come back in.
Got it. Yeah.
Maybe not all of it because of just demographics in general, but the FOMO trade will be real. And we had a little hint of that earlier this year, I think, right before the correction from July to October.
When these perma bears were like apologizing for getting it so wrong, when I remember having lunch with Tom Lee, we're having omakase, and this was July, and I'm sitting there, him and I are just bullshitting about like Korean food or whatever, and I was like, and then he starts talking about the market. He's such a junkie, Tom Lee, and he starts asking me questions about the market, and I was like, what I've been noticing? You and I have been getting a lot of compliments. Like, we're not that smart. And everybody thinks that we're geniuses. So we started laying out some shorts, and he looked at me like I stole his indicator. He's like, motherfucker, I've been seeing the same thing, Like, there are signs here,
Oh, I mean, it's a very competitive industry, as I think we all know. And then the other one, I forget if I had sent you these charts, the VIX, the most overused indicator, I think, out there.
Yes.
VIX is a teenager. It's a bar mitzvah year, I think, right now at 13.
Throw up slide 7, Spencer. So tell me, because I think the VIX works just fine. Right? It's a measure of the implied volatility, right? Like, I get it.
Yeah.
It's working perfectly fine. I don't know what's wrong with it. I think that people overthink the information and like construe, like, they make things up, fairy tales in their heads based on the information. So that I agree with you. But I think it works just fine. What is it that you think people are doing wrong with it? What do you think is the right way to do it?
This is a great chart.
They assume that, I say they, the greater investment community assume that a low VIX means complacency and imminent sell-off.
Sure.
That is just not the case. I think to say a low VIX means a high VIX is lazy, and it's, I could say, oh, well, the sun also rises every day. Of course, a low VIX will eventually lead to a higher VIX. It's just, cycles. But a low VIX can persist longer than I think we all can think. 2017 was a great idea. And when you just try to bucket the data, decile it like we're doing here, you get pretty average returns, standard returns in general when you have a VIX that's a teenager type level or even lower. It's only when you get the VIX starting to rise and equity markets start to get volatile that the issues become apparent. When the VIX is between 25 and 35 and staying there, that's that bucket 8, bucket 7 really. So don't fear a low VIX, right? Yeah, maybe you can make preparations if the internals start to deteriorate, and you can hedge that off however you want, way you want. But using that as your sole case for a sell-off, I think is very lazy and untrue.
Yeah, it's irresponsible.
And then the
Exactly.
only reason why the returns are so juiced in the 10th decile is because that's market bottom stuff.
Yeah. When you get the VIX in like 40 and above,
Yeah,
you're probably in a really bad equity environment.
right.
But you got to find the bottom. That's when you get that's the 09. You get the home runs.
Yep.
But but going through that bucket is not fun. Coming out of it, yeah, it's great.
Right. Good chart.
So I hate when people say, "Oh, the VIX is low, it's complacent." That's not really true. It's actually just kind of a bull market type scenario.
You think these insurance stocks in the U.S. and Europe can continue to dominate? And I mean, going under the radar, nobody's talking about them. Go one by one. Europe and the United States crushing. You think they got legs?
Allianz, it's another financial that made a new high today.
Allianz. Yep.
I like them. They're great. And I think this is kind of the trade-off with the banks, right? The insurers are the great structural trends, and you kind of just want to be there. But if you're looking for a little bit more near-term juice, kind of a catch-up trade, it's the banks, right?
Yeah.
But I don't see there's nothing wrong with insurers. They may not be the most fanciest, exciting names.
I mean,
but
they're lower beta, right? Just understand what they are. If you want the juice, play the derivatives.
Yeah. So I think it depends on what you're trying to do. Lower beta is probably the most important word there, where, okay, if I have high beta growth in my portfolio, but I got to balance it out, then yeah, let me buy insurers.
Low beta volume.
Low
beta value.
Yeah, managed care and insurers, and you pick the best trend, and that's it. You don't need to go out and buy these staple companies that businesses are being destroyed right now just because they're lower beta. That's not the right way to do it.
What's everybody missing? What's nobody talking about that's just going completely under the radar?
We know about the internal improvement. I think the REITs, the opportunity set within REITs, now this is a tiny sector, is actually the largest I can tell in about 2 years. I'm in New York. Commercial real estate is a hot topic here. Well, the commercial real estate names I think have bottomed. SL Green, Vornado, Boston Properties. The healthcare REITs are all right. Some of the data infrastructure type REITs are starting to perk up there too. So I think this whole doom commercial real estate thing might be a little bit overlooked now.
Also a classic bottom after what we went from
huge bear
50s
market
down to 30. So it's all 40-something% correction in the real estate index fund. You had the low in October last year. You had the retest more recently. Momentum diverging, fewer real estate stocks making new lows. I mean, textbook, is it not?
Well, you're starting to see some bases. Like if you look at Vornado, that looks like
they're
buying.
They're there, and I mean REITs are what I like about REITs. They're a tiny sector within the S&P, but there's a lot more money tracking that industry.
So how would you play it though? You would go towards these perceived risky groups. You would go to the commercial REITs.
Yeah, I think you got an opportunity there.
You buy the ones that put in higher lows and did not make a new low.
Yeah. There's definitely still some ugly ones out there. No doubt about it. But those are probably more challenged. I think you had a really big sentiment extreme with the way the street was looking at these companies. That the buildings are empty. There's nobody there. Well, they'll figure it out.
Isn't Simon a big one too? Because that's got a sweet.
Yeah, that's retail.
Oh, that's
Simon's another one. Yeah, so Simon, if you ever go to the Westchester Mall, popular one.
Do you go there?
I've been there in years. Not a big mall guy.
Are you still up in the Upper East Side?
Yeah, I'm there. I did go to Hudson Yards though the other day, and I forget who runs that property. And
we almost put a trade on this Tanger SKT, which is the outlet mall.
Yeah.
And I couldn't wrap
Tangier, I think.
Tanger, whatever.
Tanger,
I was like,
whatever.
No.
Yeah, I mean it's not a raging bull market for retail REITs, but there are ones that are improving, and people hated them after COVID.
And interest rates coming off a bit helps them, right?
Yeah, the rates I know when rates decline, there's this there's this tendency to say, oh, here's a recession. Well, they're coming off the boil here. They had a huge year.
Yeah.
Why can't, I think rates just chopping around, I think will be really helpful for a lot of sectors out there.
And you're seeing just since November with the move that we had, rates coming down, taking out those 2022 highs, financials and real estate have been killing it, and those are probably the most impacted.
Yeah, the most rate sensitive, or even you look at ARC, right? That's another rate sensitive area, and it's ripped.
ARC looks so good right now. Yep,
it was the best month ever for ARC. That's a fun fact.
Yeah, and it's interesting. Tesla's actually the third largest holding in the flagship fund. It's usually number one, but they've dialed it back a tiny bit. Then you got Coinbase and I think Roku. I think is the other big one.
When you guys Roku, like, how is this stock doing this? Like, who uses that?
I have one. It works for me.
I had one like 10 years ago, maybe.
I guess it's like TiVo. Remember TiVo?
Well, it's all built into the TV, right? Yeah. It's all just hardware now. It's all
hardware and advertising on the main screen for.
Well, I could potentially be using Roku software. And I don't even know it. Is what you're saying?
No, you're not.
No. You would know. You would know if you're using it.
Like,
yeah,
they're different. The Roku TVs, right? It's like the interface.
I have a Samsung and an LG, and it's like one of the smart TVs.
Roku.
And you don't have Roku.
Got it.
Yeah.
So Roku's like for like your grandmother that still has an old TV and you plug it in.
No, that's not true. No,
people usually.
I know. I had a Roku and it sucked. Is all I'll say. It got slow and slower.
I had one. It worked. It was like 10 years ago, though. I didn't think it.
Anyway. All right. Todd Sohn, it is always a pleasure. Todd joins us once a month here to hang out and talk fund flows.
Todd, I will see you tomorrow. Jameson shot.
See you tomorrow. Everyone else.
Ready.
I will miss you.
Adios.
There you go.
Okay, I think that's a good. The Roku is really for if you have a TV that's not a smart TV but want it to be a smart TV. Roku is an option then.
Where does one even buy a TV that's not a smart TV?
You really can't now. It's difficult. You would have to buy a used one online somewhere, I would imagine. But most TVs now are smart TVs. I have a dumb TV, but it's like 10 years old or something.
I kind of want like a dumb TV, like an old school dumb TV, and like plug in an old school Nintendo to it just to like have it, like, because it's cool, you know?
I got a Nintendo right here if you need an extra.
The real OG?
Hey.
Yeah.
Nice.
Yes.
Speaking of Nintendo and video games, did anybody watch the trailer for GTA 6?
I'm excited about this. This is so cool. I did watch it. So
explain to the adults what GTA is.
Grand Theft Auto is actually, I think, the second best-selling video game of all time.
What's the first best?
It is
Mario Brothers?
Minecraft. Yeah, right.
I've never played that. What is that?
It's after our time.
I've also never
long after our time, I think.
Minecraft?
I don't know what it is.
No
idea.
Minecraft?
Isn't it a computer game?
Yeah.
I never played video games on a computer.
So back in the day, people had these things called PlayStations. They were very popular when I was a kid. And like the game was Grand Theft Auto. You guys remember, like, started in like the late 90s, and one of their earlier games was Grand Theft Auto Vice City, which really broke through. It was one of those games where you're just like, wow, just like marveling at what video games could do. That was 2003. They're bringing it back now, or maybe 2002. 20 years later, they're doing another Vice City, and I watched the trailer. It was the most Florida thing I've ever seen. There's like alligators running around.
I'm gonna try to play it.
Florida street parties. You ever been to a Florida street party?
I used to throw them.
I don't know,
dude. We used to have parties.
Oh wait. Oh come on! It worked before. What the fuck?
Yeah. God, so you're gonna have to get your shit together if you want to play videos on this. Yeah, we used to throw parties out in the
like the block
out in the Everglades. Yeah, we used to. It was crazy. The '90s in Florida was wild. If you think Florida's wild now, you should have seen it back then before cell phones.
And anyway, as this relates to the market, this is, as Strazza said, the second best-selling game of all time. This is Take-Two's crown. Take-Two.
Take-Two.
So this is their crown jewel. It is taking them 12 years.
Yeah, I was just going to say that.
This is the latest installment.
Dude, so the last Grand Theft Auto that came out was like 2012 or something, right? It's been a long
2011,
time.
2012.
You wonder why the
It's a
stock's
very
done
long
nothing
time.
for so long. So this is big for them. And here's what else I'll say. It's like the stock is down today on like the release of the trailer, like it wasn't good enough or something. The people who were planning to play this game are still going to play this game. I don't know why the stock is down like 4 or 5%. The trailer wasn't good enough. I don't know. It seems stupid.
It's not. Well, it's not anymore. It was, but it's not anymore.
Oh,
so
okay. So I guess too, like somebody released it on YouTube, and then the company came out and released it.
Shenanigans.
I don't know.
These are long-term secular trends that I just don't want.
It was not. It kind of leaked.
This gets back to like betting on Americans and other humans being fat and lazy.
Yeah,
like betting against the video game companies seems to be like betting against Americans being fat and lazy, which historically is a bad bet. Like you want to bet that they're going to stay fat and lazy. They're going to eat bad things. They're going to, right?
No,
like, isn't this part of that trade?
This is a secular trend for
secular
sure.
Trend.
I don't know if I worry though that the legacy game makers have lost their lead in the space. It seems like the landscape has changed a lot since we used to play video games away from the consoles. So we'll see. But,
look, check out slide 2 here. Oh, whoops. That's not good. Hold on. Let me replace that. Hold on. Pull up slide 2.
Yeah, I mean, consoles have new competition now.
So you can see
it's not so much with the consoles as it is about the computers.
5-year consolidation after monster rippers.
And like, I know investing isn't this easy, but this could be the catalyst, right, for a new leg higher. We talk about how the last one came out in like 2012. Well, look at that nice leg up into the current base. They've been waiting for 10 years for their big hit to come back out with an updated or new game. I don't know much.
These were 12, 15 baggers off the lows back in 2012. So in a very short period of time, 5-6 years, these things went up 10 times, 15 times, and then have been consolidating for 5 years.
And this was
well
one
deserved.
Of those,
no,
these were some of those consumer stocks back in the day, JC, earlier in my career that like these were no brainers back then. Like just from a brand consumer perspective, these things so popular, everybody's playing these games. And, the stocks are trading single digits, something like EA. I don't know if it's the same value here today.
All right, let's do some other headlines here. We got a few other things besides the release of one new video game.
Headlines bumper. How come we don't use that anymore? It's such a good one.
The what's moving?
Mm-hmm.
We have, yeah. All right. Sure.
Well,
all right. Here's what I got. GitLab GTLB was my top gainer in the pre-market. Don't know if it still is since the open, but their earnings were good. Their guidance were good. Hey, we have a chart. I didn't even know we had that. Cool. Anyway, earnings are good. Guidance were good. Stock was up, like 13% in the pre-market. So yeah, now
10%,
we're
11% right now. $9 billion software.
Yep. All right. We had earnings from JM Smucker that I guess were good. Reminder that they just bought Hostess for an ungodly amount of money. I think what did they pay for Hostess? I don't remember, but there's a lot of money. And their sales volume actually increased last quarter, which you haven't seen that too much from other food stocks out there. So we had that. We had good earnings and delivery guidance from Neo. I believe it was good. Last I checked, it was a long time ago. But I don't know what the stock is doing. But Neo reported this morning earnings and delivery guidance.
Stock's up 8%, ripping.
There you go. So it was good. So yeah, and again with Neo and with other EV stocks, it's not really so much about the earnings; it is about the deliveries, right? So it's what they say about their ability to actually get cars off the line and deliver to customers.
They sell cars.
Earnings would be hilarious because let's be serious.
They actually sell cars. I was shocked. I was reading through it.
I think Neo. Well, Neo is memory serves, they're
Rio's
the
one of these
high.
Chinese scams, right?
Yeah, but all right,
Skip.
they're the high end. They're the high end of the market, I believe. So they delivered 55,000 cars in the third quarter. That's up 75% year over year. That's pretty good year over year growth.
Oh, they're real numbers, like real cars selling for real money.
Yeah.
Not like a VinFast situation.
Crazy momentum
No.
divergences on both a weekly and daily time frame.
I don't know.
Yeah.
I think still with China. Did you mention the Moody's thing?
I didn't get there yet. No.
We just
What
moved right into the
do
Moody's
these guys have to say today?
I mean,
It's a debt downgrade.
Of
Dude,
China?
to move them to
thanks.
negative, move them to negative now. 2 years hearing about the commercial real estate bubble and all the disasters over in China and the COVID stuff and the this and the that. They do this now. I don't know. 5-year lows in some of these Chinese indexes. They look terrible. I think the strategy just remains. There are some really good ones beneath the surface. Buy those until the rest are ready. I don't know. But I wouldn't go looking at this Moody's downgrade and run away from these stocks now at multi-year lows.
Yeah. All right.
So wow, Strazza said something positive about China. What is
Listen,
this world coming to?
I think there's a time and a place for these stocks eventually.
This Neo, man, I got to tell you, why don't we talk about the fact that cryptocurrencies are not just holding their gains from the weekend, they're continuing to drive higher. Throw up slide 2, please, Mr. Spencer Israel.
Yeah, great point, JC. And also, you can't look at just Bitcoin for something like this. Go ahead and make your point, but then let's talk about how the others don't look like Bitcoin. They've been correcting for weeks and weeks and weeks and coiling.
Yeah,
and
well, I have felt for a long, long time, and those of you paying attention know this, that if Bitcoin was above 31,000 and you don't own a huge amount, it's irresponsible to you and your family and your kids. It's irresponsible to not be recklessly long Bitcoin if it's above 31,000. And then go to the next chart. To Strazza's point,
I wake up in the middle of the night in a cold sweat every other night, worrying that I don't own enough crypto. And then I scramble and I buy as much crypto as Binance and Coinbase and Venmo will let me at one time, and then I go back to sleep.
The fact that you're buying your crypto on Venmo is hilarious. For the record. I mean,
it's a whole situation. It comes down.
You know how on Venmo,
I can only put in 1,000 at a time. Binance has these weird rules. I wasn't able to link my real bank account, so I fund it with my PayPal. It's like $1,000 limit a day. I don't know.
Wait, I saw you. Actually, you know how you can see your friends' activity on Venmo? Steve, I saw you pay I saw you pay CZ the other day. I didn't know what that was about.
I was talking to Jeff Hirsch yesterday, and he's like, "Bro, I'm up 60% on this GBTC."
Everybody's doing it. Everybody's getting some, I think is the point. These alts have much bigger, more obvious coils, right? Because they actually corrected in a realer way than Bitcoin did. Bitcoin's, yes, mentioned in the chat. Bitcoin has really been leading in a big way. Nothing's wrong with Coinbase. Rachel, love Coinbase. Own most of it.
Went up like every day last month.
Yeah. Coinbase is great.
The question should be, what's so right with it?
But I also do think it's important. I say this all the time, been saying it for years. JC, I know you agree. You can't have just one. And frankly, I don't think you want to have just two. You want to have options for crypto, because when these things are down and there's volatility, they're all down at the same time. I don't like that. So maybe I have too many crypto accounts. But why Venmo? Because I literally hit one button. It's so easy. Beep. And the fees
just deposit cash into your Coinbase account.
Another thing, outside of Binance, I don't know how Binance is doing it. Obviously, they're doing sketchy stuff. But the fees on Coinbase, not great for me. Great for Coinbase. Good for them. They're making money.
You're a shareholder.
Yeah, no. Listen, but I'm also paying the fees when I buy stuff. Have you noticed? The fees are not small.
Yeah, you'll be fine.
On like $1,000 market value purchase, you're paying like $20-25.
I've noticed.
Not higher than you would think. So
I'm aware.
Okay, all right, couple more things. Couple more
That's
things.
like that's like
let's
complaining about like the
Shut up.
carrying costs on your short that you're making 30% on, but you're paying like.
All right, a couple more things, and then we'll bring Pat on. Tough day for Nokia, down about 5% today. So what happened was AT&T just bought a bunch of cell tower equipment from Ericsson. That's going to enable them to basically no longer have to rely on just Nokia to be their 5G vendor. So Nokia down about 5% on that. I mentioned the CME.
How about these names that he's throwing out there? Nokia. What'd you say? Singular? What'd you call it?
I said Ericsson.
Ericsson. Like these names are like blast from the past.
I did
Ericsson flip phone. Is that what we had? No.
You probably had
the Razor.
You had the
Ericsson
Ericsson. You had the Ericsson brick that everybody had.
The Ericsson brick I had.
Yeah. It was. Oh no, it was a Nokia brick. Everyone had the Nokia brick. The one that it had Snake on it, or you played Snake, right? Okay.
Oh yeah. Is that like Minecraft?
It's just like it. Okay, so I mentioned the CME and record volumes in November. Sphere Entertainment, SPHE, that big Sphere in Vegas, doing a convertible senior note offering of $225 million. Barclays, the Qatar Sovereign Wealth Fund, sold about $644 million of their stake. So Barclays was down on that this morning. Of course, primary market is overseas there. And that's what I had as far as headlines.
Can you throw up slide 2 just for shits and giggles?
They're saving up some money to pay John Rahm, I think.
Look at this train wreck.
Yeah. Hey, my parents had those Nokia phones. They were rock solid. They probably still work, honestly. They probably still have them.
I don't know if I ever had.
Chat knows what I'm talking about. Those phones were great. Great for 22 years ago. Anyway.
James is saying in the chat, I don't trust the crypto platforms. You don't have to use them anymore. You have so many options.
Yeah, why don't you just use a DeFi protocol?
James,
use interactive brokers.
Yeah, or Fidelity. Yeah.
You have options. You don't have to.
Or Uniswap.
Or just go buy MicroStrategy in your brokerage account. I don't know. It's plenty of options. It's not. I just don't think it's a good excuse to not be exposed to crypto. You don't have to use these counterparties if you don't trust them. I also think that is a very.
Why don't you buy it and then just move it to cold storage?
I think it's a short-sighted and naive view, right? I think that to not trust the crypto platforms is to not do your homework at this point.
Why don't you just move it to cold storage?
It sounds hard. I don't know how to do that.
I trust.
Fine, but that's not an excuse. Like to not make money because it sounds hard is.
Yeah, it is kind of it is annoying. I trust Coinbase as much or more as any bank that you'll use to keep your money.
I trust Fidelity more than any bank that I would use.
I totally agree with that. Yeah.
All right, we have Patrick here. Let's bring him on.
Fellas,
hey, Patty, what's up, my man?
What up?
How we doing?
Tomorrow's event in Lower Manhattan is a classic Patrick Dunawilla event that he would used to be at quite.
I know. I'm pretty disappointed that I'm not going to be able to make it.
You're like, oh, how do you know Pat? It's like, how do you not know Pat? He's always around.
Pat, we could Skype and hang out while they're doing their thing, so we feel left.
I'm down. Have
what we should do is we'll have Spencer FaceTime you guys so you can walk around the crowd and Spencer could
we can say hi to everybody.
I'll wear a GoPro. How about this on my head? And I'll flip the camera around so you guys will be able to see.
Yeah. Just stick it on your face so we don't have to look at you.
Hey, JC, try not to get COVID this time, okay?
Oh yeah, no COVID, guys. Don't come back with COVID, please.
No, a couple years ago, I think it was when Omicron was big. JC and I went to one of those, and I think it was this event because it was the first in-person CMT meeting they had since COVID. So we were all.
And I think it's the last one they've had.
Yep. I think like 6 of us got COVID after.
Speaker?
Huh?
Oh, there was. I don't think there was a speaker. I think it was just a happy hour.
Yeah, I think it was just happy hour.
We're just dying to get together so bad.
Dude, how about the fact that I'm giving a presentation at the bar?
Oh, really?
Mentioned. You're
I
excited.
thought that I just misread it, and I was kind of just like in my head, like I was just hoping that I was giving a presentation at a bar, but like not actually the case. As it turns out, that is exactly what's happening. Open bar starts at 4:30, and the presentation is not until 6. I think I might be dead by the time the presentation starts.
Easy on the old marinate a little.
Let the whiskey marinate. Anyway, Pat, what's everybody talking about? Is everybody all juiced up on this gold, or is there some other conversations taking place, you think?
Yeah, I mean, the gold thing, you know, I feel like people are almost like kind of tired of talking about it because it's just like, you know, really hasn't made any progress. I know Steve certainly is sick of it. But I think the mega cap, what's going on between mega caps and small caps is getting a lot of attention. Also, you know, the latest sentiment report was kind of a big one. You know, you saw a huge drop in bears, not surprisingly.
Which sentiment report?
AAII. So, you know, and I think we can get past that. I think if you saw a rotation, that could do a lot because people who missed out, they might pile into the mega caps, the things that have been working. And if those stop working and then everything that doesn't, I think that could be enough of a sentiment reset right there. If that makes sense. I don't know if I'm explaining that right, but so there's that. And then, you know, it's not just gold as far as the metals. Copper had a nice move last week.
Yes.
They're kind of stalling, obviously, this week. But I don't know if you guys saw, like, SLX, the steel ETF.
Yes.
That broke out to like a 7 or 8 year high, or maybe a decade high. I don't know what it was. XME had a really nice, like, resolved out of that coil really nicely last week.
Yep.
So some of those metal ETFs that we haven't talked about in ages are kind of becoming relevant again.
I really like the steel dynamics. Nucor does not look terrible. I think these
steel stocks and these metal fabrication companies, whatever that means, they're standing. I don't really know what that means.
You know,
like how do you fabricate metals? I don't know, but these stocks look great.
So I wasn't XME like a coal play or something like that. Like it wasn't totally metals, right?
No, it's metals. It's metals and mining.
Metals. But it'll include most things. I think gold is in there and everything else. I was thinking yesterday, I don't know why, about these.
No, Patrick is right. It includes Console, Alpha Metallurgical, Large Resources. Yeah, he's right.
Okay.
Right. But so is everything else. I don't know how large they are. CEIX looks amazing, by the way. Again, Console. So I was thinking yesterday about how oftentimes there are stocks put in discretionary that I think should be in industrials, and then stocks put in industrials that I think should be in discretionary. It's actually really simple. Do you know what really the rule comes down to? The consumer discretionary stocks sell things to consumers. Period. The industrial stocks make the things that, in often cases, many times, those consumer discretionary stocks then sell to consumers. It's the manufacturing stuff. The industrial stocks are facing other businesses, not the end consumer, right?
Software stocks. What are they doing? What about software stocks?
It's not about software, but it's like that's a good rule. If you're ever wondering, like, okay, how is this stock going to be classified? Does it sell products or services to consumers?
Wait, are you talking about staples?
Well, it could be staples or discretionary. But if it's not consumers, if it's making the things, right, and then selling them to other businesses, like, for example, any of these industrial companies that are making planes or aerospace and defense equipment or ball bearings, right, or metal fabrication stuff, that's all going to be junked in industrials. They don't really face consumers. No, nobody likes that.
You had a really hot take. I think it was you the other day. You were saying that if they ever reclassify tech, they should just get rid of tech. And then just, because everything's a tech company, so just break it up and put everything in their own respective buckets. I never thought of that.
This is the land of hot takes. Okay.
I don't know what you guys are smoking, but that's never going to happen.
I think you're wrong because tech has really expanded to include way more things than a real to be tech, you should really just be like selling software, doing the most techy things and selling it to other
Like
businesses.
semis. Yeah.
Yeah, like fine. If you want to leave the chip makers in tech, they belong there. Some software stuff belongs there, but most things can be moved out of tech. And I think it's only going to become a bigger and bigger problem. That sector is not going to get much smaller. You might like this, Pat. There was an interesting conversation I overheard on Compound and Friends. I already mentioned it on here, I think, last week. But they're talking about how the top 10 stocks never last for more than like a 20-year period. The top 10 stocks are just constantly rotating and being recycled. I think it's going to be really, really hard to replace today's leaders.
Yeah. It does seem a little different. I don't want to use the word monopoly, but they do seem like almost kind of like that more so than any other companies we've seen in the last.
Well, it's funny you mentioned that, Pat, because what was one of the reasons why many of these dominant companies of yesterday or yesteryear broke up? It was government action. The government literally broke up U.S. Steel, and the railroad monopolies and it's Standard Oil, right? Like the government broke it up. So if not for that happening, we would be living in a Standard Oil world.
Exxon would be gigantic. I mean, it would be Standard Oil.
Well, today we have a Department of Justice that is far more concerned with giving Hawaiian Airlines and Alaskan Airlines a hard time about a $200 million merger than making sure that, the technology landscape of innovation is competitive and that these big tech stocks aren't swallowing up everything that even tries to compete with them. They don't get
silly.
They don't get much pushback from the government is all I'm saying. I think a really good argument about antitrust could probably be made for a lot of these, but I don't see many politicians making it.
Yeah, I mean, you hear it in Europe a lot. They seem to be a little more concerned with that than we do, but
they're way more concerned. I mean, the UK was what held up the Microsoft Activision deal for like a year and a half.
Yeah,
Microsoft Activision, is that going?
Yeah,
through?
It's done. But the UK held it up for like a year. So, yeah.
What do you guys? What do you think of yields? Do you think they bounce here, scare everyone for a few weeks, and then ultimately break down, or
no?
You think just clean retest and then rip higher?
I mean, they didn't retest anything.
They're down
through there like resistance wasn't even there.
They're below the line.
10s,
yields,
30s, 5s.
I meant yields, not the bonds, but yeah.
No, if they're below those 2022 highs, I just think back in the box, trendless. It's a range bound pattern now.
Yeah.
I don't know if you guys can easily bring up the chart report, but there was a really interesting chart I threw in there yesterday.
Can't we easily bring up the chart report? Come on, it's what we do.
Yeah, which chart, Pat?
So it's
chart.
Catherine Rooney Vera. It's kind of in the middle there, but it shows like the distribution of the 10-year yield over time. And it spent most of its time, like a crazy amount of time, in this 4.1 to 4.2 range. I just thought that was really interesting. Like this is pretty normal. I mean, if you look at that bar all the way to your left, that shows basically that it spent way more time right in this range than anything else.
Is she using volume at price?
I'm not exactly sure. I think it's a distribution.
Okay, yeah. Because there shouldn't be volume.
No, it's not volume. Yeah, I'd have to look at it closer.
So I guess the takeaway is, as crazy as a lot of people think this is, oh my God, rates are so high. It's really not all that crazy. But then you have people come in and be like, well, things were different in the 80s.
Well.
JC,
I'm pretty sure in the 80s, doctors told you it was okay to smoke cigarettes.
That was before.
Have you seen some of these hairdos in the 80s? Have you seen Sean's hair?
How about these moves in real estate? I don't know if you guys have seen that. Had its best month ever last month. I mean, obviously that's a yields thing.
You've been on the real estate. You're ahead of this rotation.
Classic.
Yeah, didn't really know what was going on because the chart wasn't looking great, but it did in September, October kind of bottom out there. and then epic fail breakout. Or fail breakdown. Sorry. And that's a really interesting one. It was best performing sector last month, last week, yesterday. It's showing some relative strength there.
Real estate or financials? You can only pick one.
I'm going with financials, I guess.
Where I grew up, real estate was financials. So I'm just a buyer.
Back in the 80s.
I just keep it old school, baby. Old school. You know what I'm saying? Spencer, hit
Back
that
in the
recess
80s,
bumper.
we were throwing Everglades parties and buying real estate and financials at the same time. Crazy.
Wrestling alligators.
Wrestling alligators. Someone asked about crypto real fast, about buying the miners or GBTC in large quantities as a substitute for Bitcoin. You guys are on board with that, right?
We discussed it last night. So why don't you drop the link and have them watch the video?
Yeah, go crazy.
I only strip house in Village, in the East Village, just south of Union Square, right around the corner from Japonica, one of my favorite sushi joints. Pat's smiling. He's like, "Oh, I know that one."
I know it.
Corner from Japonica. Strip house has this ribeye with foie gras on top of it. Right, it's a bone-in ribeye with the foie gras, and honestly, like, I lay down in my bed and I think about it, and I have dreams about the ribeye with the foie gras on top, and I'm constantly thinking about it. I think I need to see somebody about it because it's not healthy.
Would you rather have the foie gras on it or like bone marrow butter?
Great question. Great question.
Right?
I don't know. I feel like it depends what kind of mood I'm in, Like, what are we drinking?
Okay.
Like, what am I drinking with that? The foie gras, you can go with like a Chateauneuf du Pape. You can do some Italian stuff, but like if you're gonna go bone marrow on the steak, then I think you got to go Bordeaux, right? So it just depends on what I'm drinking, I suppose. Listen, first world problems. If the biggest problem I have is that I don't know what to put on my ribeye, foie gras or bone marrow.
Yeah,
that's living right there.
Life is good. So, and why are you dreaming about these steaks specifically right now? Are you like going to eat them tomorrow?
I'm not, unfortunately. I'm getting pizza with Mary, and then we're going down to Stone Street. So I'm actually not going to eat it. So but my college buddies all want to get together for a dinner, so maybe I can convince them to go there. I'm pretty sure I can.
Wait, just to clarify, is this dinner or dinner?
This would be a first dinner. This would be a first dinner. Yeah.
Do you know where you're going for pizza yet?
Prince Street.
Hey, nice.
Yeah, Mary's like, JC, you never take me for a pizza. So I'm being selfish, and I personally want Prince Street. So I'm taking her there.
I like it.
Yeah.
I got nothing.
All right,
guys.
Yeah, I also got nothing. My life has become incredibly boring these last few weeks. All I do is assemble furniture and fix things around my house.
How did it go with the man that you hired to build your?
Oh, it went great actually. So good that I'm actually gonna probably do it again today, or not today, but like this week. I'm gonna try to hire someone again to build.
Did you tip him, you cheapskate?
No. That was not the question. The question was, I didn't know if this was like an Uber situation where like the app will prompt you to tip, or do I have to like have cash ready because I don't have cash to like
have
tip
Strazza
the guy.
show you how to use Venmo later.
What app did you use?
I used TaskRabbit. It was great. It's an app. It's all in the app. It was wonderful. So yeah, I definitely recommend.
You know that Josh Brown,
JB,
way back in the day, JB, before the Reform Broker blog, which somehow was 15 years ago, time flies, used to have this website called cityhammer.com, which was way before TaskRabbit and all of this stuff, which was basically that, but in the city. It's called City Hammer, and you would hire like people to come and do things that Josh and I didn't know how to do.
Right.
And I like this was like 06,
really,
something like that. Oh yeah.
Wow.
Isn't that funny?
City Hammer.
Way ahead of his time.
What happened to it?
he was too busy doing other shit, so he just gave it to his partner or sold his to his partner or something like that. And then TaskRabbit eventually came around, so put him out of business. I don't know, but yeah, that was real. Visionary, that Josh Brown. Visionary.
Huskies Tar Heels tonight. I'll be tuning into that.
Yeah. All right, that's our show. Thanks to Todd Sohn. Thanks to Pat for hanging out. We do have Twitter Spaces on the Chart Report coming up at 11 o'clock Eastern Time, about an hour from now. Chart Request Live is going to be Pat and Steve. Maybe both days going forward now for Pat and Steve. We've gotten some good feedback on that. So Pat and Steve, 1 o'clock on the Chart Report. CRL, if you have any requests for that show, email them in. They'll get to those first questions at stockmarketmedia.com. That is our show. Have a good day. Go make some money. Catch you guys later.
Bye, everybody.
Get some duck liver mousse. Gorge those. Just gorge them. They're going to gorge themselves anyway.
I can't take no loss. I don't even know what it costs.